Thank you very much for being here, and apologies now for this 4-minute delay that we've had in getting the session started, or 5 minutes. Today's session is about giving you an introduction, or to giving you an overview of how we trade, how we pick direction, how we use trading strategies to keep the odds in our favour. And my background is been trading options for a long period of time, nearly 2 decades. I've run one of the busiest options trading desks in Australia, been the education partner to the ASX for the last 3 or 4 years, and I work closely with Tradefloor, who build our options trading, or work with us to build the leading options trading technology in Australia. If you're going to trade options, there are things that you need to be good at, right? And one of those things is picking directions, obviously really important, using strategies that can keep the odds in your favour, and then managing your risk and being able to pull all of this together. So we'll go through all of that today. Ivan Cherylov sends his apologies. There was a conflict with his calendar, and unfortunately he wasn't able to pick up, but we had this session on today, so I apologise for Ivan. But we're going to be running through how we pick direction, how we use options to keep probabilities in our favour, and a proven trading system. Any advice contained in today's presentation is general only. It doesn't take into consideration your personal circumstances, and you need to decide whether it's appropriate for you. Past returns are not an accurate indicator of future returns, right? And we will be talking about past returns because we do a lot of back testing on everything we do. Our job in running a trading service is to help you be successful using a number of methods. One is we give you the best technology that is available in Australia if you're an options trader. There's no question about that. We do a lot of work to test different trading systems and methods for picking direction, right? So that you can use trading systems that give you proven methods. And I will go through an example of a trading system, but people that use our platform get access to all of this quant-tested data and trading scanning tools so that they can identify trading systems that are likely to give them that will move the odds in their favour if they're going to trade, and they're going to trade successfully. And to do all this stuff, you need education, you need support. So we provide you all of that so that you can actually use this technology to your advantage and you can trade successfully. The other thing I'll add is if you're a trader, you're in the business of trading, one of the biggest costs and one of the things that eats into the people's profits is brokerage costs, right? And we are big believers in every way possible keeping those down. So if you can do a trade online, then and you've got the technology to support you to do it online, then it's a way that you can really quickly reduce the cost of your trading. And I'll touch on this and show you some examples of how we do that. But bringing costs down is a really important part of what we do, and we offer the least expensive options brokerage in Australia, and we're the only place that will allow you to do multi-legged trades online. All right. So what I mean by that is, for those of you options traders, if you wanted to do an iron condor, there's 4 legs in an iron condor trade. If you were trading over the phone with a broker, that might cost you up to $400 in, $400 out. You can trade an online condor for us, $24.95 per leg, right? So it's significantly less, and it allows you to use smaller amounts of capital in the market, right? We give you the ability to predict what the future movement of a share price is going to do to the future value of your option, and move in and out and do options valuations quickly, scan the market looking for trade ideas, backtest any of your own trading systems, or look at the backtesting work that we've done on any of ours, and give you trade ideas and give you probability rankings on those trade ideas. All right. So moving right beyond that, there are 2 types of, we're options traders. You can trade different instruments. Options have been around for a long period of time. They are traded on the stock exchange. So when I'm trading an option, I'm not trading against the house. I'm trading something, predominantly when we talk about options, I think about them as a trading instrument, but the majority of people are using options, and the vast majority of options that are moved through the market are used by people using them as an investment instrument, either to insure a position, to lock in a purchase price on a stock, or to create some additional income against a share portfolio that they have. But options allow us a lot of flexibility when we want to trade. They can give us a lot of access to leverage, or they can help us specifically design a strategy that articulates our view of what a share price is going to do. So I don't have to pick direction, being up or down. It could be sideways, or it could be just a big move, but it gives me more flexibility than other investment products do. Now, not to give you, if you are interested in education on the basics of options, type in education into chat box now, and we will give you an education course for free that you can go through in your own time and learn all of the basics. So just type in education if you're new to all of this, and we'll send that through to you, and you can go through a whole library of education videos that we put together, right? But I'm just going to touch very, very quickly on what options are. There are two types, calls and puts, and really simply, a call option appreciates in value when a share price or an index goes up, and a put option appreciates in value when a share price or an index goes down. All right, call up, put down. Now, options give you leverage so that I can buy using a relatively small amount of money. I might, like, for $1, I might be able to get exposure to a $15 stock or a $30 stock, right? So I can control that stock for a relatively smaller amount of money. So I've got the leverage aspect. So I can make a leverage play on the way up. I can make a leverage play on the way down. All right. But I can also bring options together to improve my probabilities, the statistical probability that I will be successful on the trade that I'm going into. Right? So I could do a trade where, as long as it fits within this green or this red range, I make my maximum profit on the trade. So statistically, the odds of it falling within that range in the timeline that I'm in the trade might be up to 68%. That's before I optimize it by being good at predicting what's going to happen next. That's just statistically, that's what's going to happen. So we can use options to improve the probabilities and keep those probabilities in our favor. And we can use options to adjust our trade and our view and what that trade's actually allowing us to do. All right. So what is, how do we make decisions? Well, there are different ways of doing it. We use technical analysis, which is looking at the price history to help us identify whether we can see what's going to happen in the future, right? And there are different indicators. Now, I'm not here to give you again a tutorial on this. Bear with me if you're an experienced trader. I'll run through it very, very quickly and then go to a trading system and show you how we use these things in context of a trading system. So really quickly, some of the indicators you'll look at, first is a candlestick, which allows me to look at the open, high, low of the day and see where it traded from open to close, right? But also see the highest and the lowest price. And what it's telling me, if the open, if the close is higher than the open, then I'll see a green. And if the open is lower than the close, or the close is lower than the open, I should say, I'll see a red candlestick, right? So if I look at this on a chart, I can see, where the action is being for that particular day, right? And as I look at a chart over a period of time, it allows me to sit back and look at it and go, all right, well, can I identify any support, or resistance level? Can I see whether there's been a breakout? Can I see whether it's trading above a key level? So I can sit back and I look at the chart and I can observe different information that I can use as part of my trading system to arrive at a decision whether I want to do something or not, right? So that's how we use a candlestick, right? The next key thing that you'll see people use, so there's a bunch of candlesticks on a chart here, is can I identify where buyers and sellers are coming into the market, and is there any key levels that I can identify, right, which can help me identify resistance and support levels, and it can also help me identify a trend line or a trading range, right? So I can use these candlesticks on a chart to display the information, and I can draw lines to see if I can identify any key levels, right? And people use these support and resistance levels in lots of different ways over lots of different timelines, it's a really important thing. The next thing that you'll see are commonly used are moving averages, which is probably the key indicator used by trend traders. Probably one of the key ways that these moving averages are used to identify, are we in a bullish trend? Now, the identifier for that is the shorter term moving average trading above the longer term moving average. So we'll look at that to identify, is the overall trend bullish? And we'll gain more confidence, and sorts of things that we're looking at is, well, is the share price trading above that shorter term moving average as well, right? That's represented here with that crossover where my mouse is over there as what we would refer to as a golden cross. This here, where the shorter term average has crossed over the longer term average, is what we refer to, the trend is down. It's a death cross, right? And we'd also be observing that the share price is trading below that moving average in this instance, to say that the trend is down, right? At sideways, what you'll find is that quite often if share price consolidates between these two levels, it'll stay in that range for an extended period of time. So there's another thing that you can use these moving averages for, is to identify sideways action as well. What I'll say is that when we do technical analysis, we're not too worried about any one indicator. Just because there's a golden cross does not give me the confidence to jump into a trade and do it. I'm observing a number of different indicators together and operating on the basis that it's been observed over a long period of time that when these things line up, I've got an edge, a statistical edge, that I can predict what's going to happen next. So we often say this, but as a trader, we're a sifter, not an alchemist. We cannot look at the market and identify what's going to happen next. What we can do is sift through, and when certain things line up, it will give us a strong degree of confidence that we can observe what's going to happen next, and then we will make a move on that, right? So we use these different indicators in tandem, but there's not trades there all the time, and we definitely don't feel like we can predict things all the time. So just again, the golden cross and the death cross, if you haven't come across these terms, are terms that you'll hear if you're hearing people talking about moving averages and trend trading, all right? Another indicator we use is the average ADX, which is an indicator that was built to smooth out different price action, to give us a probably more confidence that a real trend is present when we're doing a trade. So when we're looking for, when we're doing directional trading, an ADX that's above 2025, and when we're doing sideways trading, the more we get more confidence, the lower that ADX is, right? So it's something that we observe more so when we're doing directional breakout trading, but it also can be used in some instances on sideways when the ADX is really low. It gives you a lot of confidence that you're likely to see not much happen on the price from a volatility and a price move perspective, right? There is the question, is there a single best indicator that can help us understand whether traders are complacent or fearful? And the answer to that is there is. Implied volatility is that. And you might note that we've called our trading platform implied volatility because it's a key indicator. It gives us a real understanding of where people are in the market, right? So it allows us to understand, based on future expectations of price dispersion, what the share price might do, right? So it's based on real sentiment of traders. It's about what's really happening and what their view of future movement is. It's got a great track record for accuracy versus what's going on in the real market. It can be used as a ranking indicator, and it's a really reliable indicator to gauge what's going on over the entire market, right? The issues with using implied volatility is that it's difficult to get this information. It's something that we spend a lot of time and money in building into the platform, but it's also not available for stocks outside of the main stocks on the market, but all the stocks that you can trade options on. All right, so but it's something that we're big believers on. So it comes from market-driven price data exchange-listed options, which is ultimately sort of that understanding of the insurance for shares. So it's kind of like saying, what do people think? What is their fear level in the market? Do they think that everything's just going along and going to continue to amble along, or do they think that there could be shocks or problems or things that are coming on, and that will drive that range of volatility, which obviously then underpins options pricing. All right. Sophisticated investors and traders use options to gain an edge over the rest of the market and to optimize their returns. So it is commonly used by investors, right? And alike, the people that are sophisticated options traders, what they talk about one of the key things they talk about, maybe the key thing they talk about, is implied volatility and the impact that will happen. All right. Dow theory, which, it's still applicable in the theory of it, less applicable in terms of how it plays out in the market these days, but it's a good way of sort of understanding that, the cycle that we go through and the emotions that we go through. The disdain for the market, then the caution, the growing confidence as people start piling into the market, the enthusiasm, the still retained hope, and then that apprehension and surrender that occurs, which underpins really what happens in implied volatility. And in a lot of ways, when you look at where implied volatility spikes up, is what's going on, that surrender, the disdain levels that come in. If we understand this and we can trade this, gives us a massive opportunity over other investors, and it allows us to see the market with a different dimension and use this information to be able to bring into our trading to get an edge over what other traders see and what other traders. So volatility is high during fear and it is low during greed, right? And we can see these levels here, if you can understand how to trade this volatility when it's high and the opportunities that it presents, it makes it interesting for you. One, on an options pricing, but it's actually proven to be a really good indicator for identifying entry points in the market as well, and trading opportunities in terms of just really picking direction. Right? So this is a chart of CBA, obviously going through recent volatility, and you can see as these volatility, this is an implied volatility indicator which is on a chart which is sitting in our implied volatility system. You can see as these implied volatilities levels have spiked, they've also happened at points where CBA share price has bottomed out and gone up. So when volatility is at its highest and fear's been at its highest, that is represented buying opportunity. If you can understand that from the perspective of options pricing and which option strategies you use and when it's a good time to sell options and when it's a good time to buy, that can add another dimension to your trading system as well. All right. So we had our quants run a 6-month research project over the topic of implied volatility, and we published that data, and there is a research report on that which you can get access to as well. But they empirically proved the accuracy of implied volatility over 55,000 samples of daily data. So it's a really big project. So you can see here, statistical estimate and real results of what happens. So we can see that statistically there's an expectation of it staying within of the stock movement to the next options expiry. The market saw this as 70%. The estimation based on IV was that 68% would fall within this range. The real result was 70%. So the prediction from the market is actually very close. And again, we can see that over time. Obviously, the broader you bring the range, the more likely it's going to fall within that range. All right. So we specifically use option strategies to take advantage of times when we know we have a statistical edge in the market. All right. So, when the sellers are at this high point, we can see that, this is surrender level in the market, and when the fear levels are low, these represents, I guess, that contrarian approach to being able to identify this is what's actually happening, and being able to move into the market or put together option strategies that will give us the edge. So it allows us to show a rank which shows us how expensive volatility is for that asset. Right? We build a ranking system that allows us to look at each stock individually and understand this. So IV is high at 100%, it's at its 52-week high. At 50%, it's at its average, and at 0, it's at its 52-week low. All right. We built this into the system so you can see an IV ranking indicator. We use it in our scans and our trading systems and the like to identify trades, but it allows us to look at, okay, here we can see Lendlease is a 62-week high, so it's higher than normal. but really it's giving us that, understanding of, the chance of the stock moving within half a standard deviation to the next expiry, which allows us to increase the statistical chance we're able to identify that, the chance of large unexpected movements, we're able to reduce that, and less facile risk in the trade. All right. So while everyone else is dumping their stock positions, driving volatility up, we're sellers of this uncertainty, and on the flip side, we can be buyers as well. All right. So Gary, if you've got any questions, sorry, someone has asked to be unmuted. We run everyone that's in the session on mute. So if you want to communicate, do it via chat. There is, 30 people in the session today. So if I unmute everyone, it becomes a bit hectic. If you've got any questions, Gary, please just type them into the and we'll address them. All right. Now, moving into trading systems. A trading system is, a business plan for how you approach your trading. And I'm going to go through and show you the most basic trading system that we run for you to have a look at. But we have many different trading systems. When we're running a trading system, ultimately what we want to achieve from it is we want to be able to trade in a way where when we're making decisions, we're as mechanical as possible. We don't want to be making decisions where a high degree of emotions are running, which can be entry points and exit points. So yeah, we want to be as least emotive as possible, and we want to be risk management focused. But when you're putting a trading system together, it's like if I run a bakery, and I think about baking the best bread on the planet, that won't necessarily lead to me being in business in 12 months' time. Right? It could be delicious, but if I set my shop up on the wrong end of the street, I don't manage my inventory, I don't employ the right staff to be on the front desk, I can make lots and lots of mistakes, little ones that all over the place that will determine how successful I am. And as a trader, it's exactly the same. You have to have a business plan, a trading system that considers all the things that are going to determine how successful you are, right? So you'll always hear us talking about trading systems. And when we're looking at a trade, we'll talk about an edge a lot internally over a glass of wine, maybe what we've observed in the market, but we won't bring that into our trading until we've considered how that's performed over time, what option strategy we would use, how we would manage the risk, how we would repair, if we were doing that trade, and then once we built all of that together, how we would run that and backtest all of those assumptions over a period of time. We use technology, and Cray 2 is this, the supercomputer from 1985. It weighed 2.5 tons, cost $300 million based on 2017 prices. But look, I think the iPhone X was 6 times, XS is 6 times. So this little computer that's sitting on my table right now, I've just dropped it down to that noise, is the 6 times more powerful than this Cray 2 computer, right? 240 million times more powerful than the Apollo 11's guidance system, right? So technology has come into play, right? And but a lot of people trade in exactly the same way they were trading 15 years ago, right? They haven't changed, right? They're using the same technology, using the same charting systems. That maybe the interface has slightly changed, but they're not using technology in the way they could. So all the powerful backtesting that you can do on a trading system, and then how you can build that into a scanning system, and then bring in implied volatility information to help identify which trade, which strategy, and which trading system should be applied for a particular strategy. All of these things are super critical and will dictate how successful you are as a trader, and can give you a significant edge in your trading, right? But a lot of the times are just not bought into what we're doing, right? And you can see this, just the infold increase into what we're doing from 1956 to now, and what's happened in more recent years. And this is the growth on this is expediation. It continues to grow. All right. So we use in our trading systems quant architecture to look at millions of data points to help us increase the odds of picking direction in our favour, and then using an option strategy that will give us an edge. Now, Russell's asked the question, is there automated systems? Yes, in what we do, we provide automation in what you can do in terms of identifying the trade, right? But you have to press go on the trade, right? So we can do everything up until the point where you have to say I'm in and I'm out, but all the rest of it can be automated and can deliver you with trading systems, or right? So coming back to how we approach this, if we're doing a trading system and if you're building your own or you have your own one, first is you want to establish your hypotheses, right? Now, Ivan and I have sat down over a bottle or two of red and discussed ideas about our observations of our own trading systems we've seen other people, to come up with the hypothesis of what we think the trading system should be, right? So we've come up with that, and then we've done a soft run to prove it to ourselves, and then we brought our quant analysts in and asked them to observe, hundreds of thousands of data points to actually prove whether we're right, and then move us into the next stage of it, which is actually optimizing it, right? So once we've gone through and we've tested that, then we'll come up with a defined set of rules which are mechanical that allow us to actually go and trade that trading system, and then we'll want to optimize those rules going into the future, right? So all of these things, you could start off by reading a book. You could be already sitting there and looking at what you're doing that you believe gives you an edge in the market, but bring it into a trading system. We believe that testing regime is really important, and it's something that we're building into what we're doing. All right, so the benefits of trading systems is profit in the market. We always want to be looking at having a system that allows us, we're just observing what's going on in the market. We don't care if it's going up or down or sideways, we're just observing it. The old saying is, if the only tool you've got is a hammer, everything starts to look like a nail, right? If you're always trading bullish trades, it doesn't matter if the market's bearish, you'll be looking for bullish trades, right? So you'll start to find something in a market that may not actually be there. But if you're impartial and you're just wanting to observe things, then you'll be able to trade the opportunity that presents itself. Use quant architected and mathematically proven and tested, and use simple rules. You want to keep it as simple as possible, right? So I'll give you an example of the most simple trading system that we've got. And I believe most of you should be able to, if you've had some exposure, understand this trading system pretty simply, right? So we were talking before about moving averages. These shorter term 50-day moving average has crossed over the blue line, which is a 200-day moving average, forming a golden cross, right? What is that telling us about the trend, right? So the trend is up. So our first tick box is, are we in an uptrend? And so we ask ourselves question one, is the share price above the major resistance, right? So first of all, we're looking for a 52-week high to be broken, and on this particular day, that resistance level has broken, 52-week high, right? The moving averages crossed over, golden crosses occurred, tick. Is the share price above the 50-day moving average? Yes, it is. Is the 50-day moving average, this red line, trending up? Yes, it is. Is the ADX above 20? Sorry, but I've somehow blocked that out, but it was, right? 5 ticks. We've arrived at a conclusion that, based on our back testing, that this is a trade, right? Now, one of the challenging points, this is just one trading system, by the way. I'm not saying it's the only way to trade a bullish move by any stretch of the imagination. This is just one of them. We're trading, in this instance, a breakout. We're expecting, if the move happens, the move will be considerable, right? We are not going to this trade to get in and get out for a 15, 20%, 30% profit. We're going in because we believe a considerable move will be happening, right? We're using option strategies for leverage here, right? Now, a lot of people at this point in time, having broken a 52-week high, are going, oh, geez, it's high. It's gone up a lot. See how much the move is on the way up? Oh, the move's already happened. I don't want to get in here. I've missed the move, right? In our case, we're getting into this trade because we believe the move will continue to happen. Now, I will add, right, that when we're wrong with this particular strategy, we have got rules for repairing the trade and going short, right? So we'll switch our trade. So in this particular trading system, and not all of them, we're looking for the switch, right? And So when we go into it, the trade that will make us the most amount of money is the one where it's not a breakout, it's a fake out, right? So it's an important thing to observe when going to the trade, right? So we're looking for a big move. The strategy that we use is a lit long strategy, which is an at-the-money bull put spread. And I'm just going to jump into our trading platform, right? So this is the implied volatility trading platform. Just open this up to a new tab. And we'll go into our trading simulator. Now, the trading simulator allows you to go back to any point in time and choose any trade you want, I should say over the last 4 years. And we've got all the historical implied volatility data, so you can go in there and actually trade it at any point in time. So I asked Tim, who runs our trading desk, to put this strategy together, and I'm going to put Tim on the spot and get him to run through this trade for us. So we're looking at, well, Tim, I'll hand over to you to run through this particular trade.
Sure. So this one we're looking at James Hardy, a lit long, which was flagged by our systems on the 15th of August. So I've got the order in here. We're looking at a maximum loss of around the 3,000 mark, and we'll tick it along day by day. Of course, we've got the sold put here and then the bought put here. Sold at 23.50, bought at 22.50. And as we tick along, we'll see that the breakout is starting to occur a bit more, pulls back a little bit partway through, and then bounces back up again. As we head up towards the 17th, which is today, we can see that we are quite far ahead for the trade, seeing we risked $3,000 and we're up to 2,686 in profit at the moment. Also got another example here of Newcrest Mining. It's had a very good run recently. We had a lit long flagged on the 3rd of June this year. So we're looking at, once again, maximum loss around the 3,000 mark. We've got the strike, the sold leg, the sold put at 29.50, the bought put at 28, and we're looking at expiry between 30 and 60 days, usually somewhere around the 45-day mark.
Right, so just to slow down a little bit. So when a trade presents itself, and I might go back to our trading platform. So when you log into implied volatility, the main page generally you go to is our strategy builder section, and we want to go and have a look for trade ideas, right? So that would take us to our trading scans page, and I'll just open this up. Now, at the moment, there are no directional trades. We can see a couple of iron condors have presented themselves, right? But we can see that James Hardy here has got a lit long approaching. And so there could be another trade if it trades up a little bit higher. You can see from this little tree here that it just needs to go above this $24 level to be back above its 52-week high. And it gives us, there's no next dividend's 84 days away. So basically it brings in that trading scan. If it goes green, all you do is you click on it and it will actually launch the strategy for you, right? And it will provide you with a payoff diagram, and then you can just go into the trade and put the trade on, right? So if the trades present itself, it's a number of just click buttons all the way through to placing that trade into the market. Going back to the trade that the Newcrest Mining trade that we were just looking at, on the day that, on this date here, what was the date in June?
It was the 3rd of June.
So on the 3rd of June, it broke the 52-week high. And in our trading scan system, it showed, okay, here you go, here's a lit long. And so if you clicked on that button, the trade, it would have actually created the two legs of the trade, and you would add the quantity that you wanted to do and the amount you wanted to risk, and you'd be at the races, right? So on this particular day, I think, which is the entry day we chose, we were in a clear breakout and we were lit long, right? And as we click through, so we go back, the blue line here is wigging out. There's a crossover that had occurred. The moving average was trending up. Share price was above that. It broke a 52-week high. It met those rules. It scanned it, it presented it to you, and you get into it. So if you got into the trade, as you click through, you can see that from how much risk, Tim?
Looking at $3,000.
Okay, so if you'd max loss 3,000 max profit, 5,000, 4,500. So we get into the trade, it opens up, you're up $200 day one, it comes off. We'd be watching this, but we've got a rule for if it crosses over the 50-day moving average, then we would actually be repairing the trade and going short, but that hasn't happened. Right, so $3,000 risk, you're up $500. As we tick through, now you're up $1,000, right? So you've risked 3,000, you've made $1,000. What's it? You're a little bit over 30% profit on the trade. A lot of people would be taking profit right now, right? In our trading systems, we would not be taking a profit. We would be in the trade, right? Now, this is one of the things that I've heard people say, options educators and the like say, is you can't go broke taking a profit, right? It's that is not correct. Absolutely, it's one of the main reasons people go broke is they take small profits and big losses, right? And they don't have the fortitude or the confidence in their trading system to stay in a trade. So they'll panic out and take a profit because of a bad experience they had in the past where they lost money on a trade. Oh, I could have got out and I didn't, and then it went down. And then they let that one experience colour how they approach trading. Whereas what we want to do is we want thousands of different things that have happened and observe those 1,000 things and let that dictate how we feel about a trade. And then when we're in a trade, well, that's just one instance of a trade. That's not going to colour how I feel about trading. I want as impartially as possible, albeit my emotions will run high, stick back with the why I do what I do and why I believe in what I believe in, right? So if we're in this trade, we'd stay in it. On this, and it continues to power up in this instance, but we'd still be in the trade, $2,500 profit, we'd still be in the trade. It still meets our rules, it's still moving up. We want to stay in the trade and take a significant profit. Now, at this point in time, you've at 3,785 of a 4,500 max profit, you might start thinking, well, there's not much more in this trade for me, but now my downside starts to, there is plenty on the downside. So, but time decay is working in your favour. I actually don't need it to go up anymore, and I'm still going to be making money out of the trade. So there are arguments for staying in it at this point in time, right? And so as we see, it sort of flattens out on the profit side, and we'll take this through to expiry, right? So you could stay in it a little bit longer if you wanted, but you don't have to. So this is an example of a trading system. This is a breakout trading system, but for us, we don't, it's just one example. We're trading in a bullish market. Overall, most of the trades that we've observed, for quite a while now have been bullish trades. Overall, the market's been bullish. And there have been lots of times where people, their fear index are high. They're worried about, oh, it's going up a lot. It's going to come down. We don't care. We stay in it. We follow our rules. We follow our trading system. There have also been a lot of more volatilities coming to the market, which has given us a lot of iron condor trading strategy opportunities that come up. We can see that in our trading scanner today, there are a number of iron condors that have presented themselves, for people to look at, those trades are there. For us, we don't mind, right? So our service is about providing you with education. So built into our trading system, there is a lot of education. There is weekly catch-ups where we look for trades in the market with you each week. We put out our trade ideas each day. We have got support for you. So if you're going to trade using our systems, we can one-on-one educate you on the trading system, and we really give you a lot of support around that. Really a lot of it is about giving you trade ideas as they present themselves in the market as well. If you're an options trader, it allows you to do things that previously have not been possible. So an example of that is our options cookbook. If you wanted to do a strategy called an iron condor, which is one of our favourite strategies, we've done a lot of research on iron condors, but the problem with iron condors for people historically have been that they can be expensive, right? Now, Rod's asked the question, what is an iron condor? If you've requested and you have our education, we've got education videos on iron condors, but I will show you what an iron condor is from the perspective of how you make money out of it in one moment, right? So when we go into our option strategy builder and we want to do an iron condor, I go create strategy, right? and I'm creating an iron condor on Newcrest Mining. I'm going to start a new trade. I've done this in the trading simulator by mistake. Apologies. Right. Let me go back to my strategy builder. All right. So when I'm in my options strategy builder page, all right, if I want to build a strategy, any strategy that I wish to build, I simply click on the options cookbook, type in iron, it'll take me to iron condor. I can search in other ways, and I will take this out to 37 days. All right, so choose my expiry. So what I'm looking at is an iron condor, and what I can see on this payoff diagram is where the share price needs to be for Sonic Healthcare on expiry date. So this payoff diagram is saying for me to be in profit on expiry, it needs to be here. Now I'm just going to select a few more contracts, so this is a little bit closer to something that we've bothered doing. If I choose 100 contracts, well, actually I'm getting a bit exuberant there. So 25 contracts. So if I was to do this strategy, the maximum loss on the strategy is $1,500 and the maximum profit is $900, right? When I was trading a directional trade, I actually needed the market to go up to make money. Whereas in this instance, the share price can finish, as low as 26. The current share price is $27.79. If it finishes at 26.68, I'm still making a profit on the trade. So if it finishes anywhere in this range, I'm making my maximum profit. So you can see it's quite a wide range that it can move in, and I'm still making a profit on the trade on expiry, right? So I can set that trade up. If I want to do the trade, all I need to do is observe the trade. I can see the different legs of the strategy, and then I can go execute strategy, all right? John has just made the point, which is, for those of you that have traded bear calls and bull puts, is that an iron condor is a bull put and a bear call. And John, you're spot on. That is an accurate way of, and a way that some people might find it easy to understand. You're just bringing those two strategies together. All right. So what I need now to happen is, if I don't think this share price is going to go up or down a lot, I can trade an iron condor. But all I need to do is press click, and it allows me to price that strategy and put it into the market. Now, I'm not going to do that right now, but what I'm going to do is, we've been going for quite some time, so I'm just going to quickly go back to our trading systems and just make a couple of other observations, and then we can go into a few questions and call the session to a close. So from our side of it, we offer a trading platform which gives you education to teach you exactly how to trade, how to use the technology, and how to trade using trading systems, how we pick direction, the options, how they work, the option strategies that you can use, and how you build all of that together to bring into a trading system. So we've built the education around that, and we provide the support around that to help you do that. So you don't need to go and do an expensive course to understand how to do this. You don't need to pay big dollars to an advisor to do it for you. You can do it all online if you wish, right? But if you need to speak to someone over the phone, absolutely, you can get that support as well. So we're trying to give you the best of both worlds, but ultimately when you're trading, really reduce the cost that you have when you're trading, but give you leading, giving you the leading technology that's available in Australia. Now, if you would like to take a trial to our platform, all you need to do is type in yes, and we will set you up for a free trial. That free trial will give you the education system. It'll give you access to the platform, live dynamic data, the ability to put trades on. Now, if you're an options trader and you want to get in, you want to test it, well, there's two ways you can test it. Also, we'll give you $50,000 of fictional money that you can practice trade in the live market, right? It will give you access to all our trade ideas. And so you can follow our trade ideas. You can paper trade those trade ideas with fictional money. If you're keen to get out there and start trading using this system, we'll give you 6 free trades on top of that as well, right? So no brokerage 6 free trades, and you can get out there into the market using the best technology, access to live dynamic data, full trade systems, and all the support behind it for absolutely no cost. And we'll also throw in some trade ideas to get you started so you can actually test it. We believe that if you get on there and you start using this type of technology, you're not going to want to look back. But obviously the first decision you need to make is that you can do what we teach, and that the technology is going to support you and help you take your trading to the next level. Or if you're new to this, get involved and be able to get started with your trading. So if this is something you're interested in, all you need to do is type in yes into the chat box. For all those people that have typed in yes, go for it. If anyone's got any questions around it, please let me know, and I'm happy to talk and answer any questions anyone's got now. Russell's asked the question, is it okay for self-managed super funds? All I can say about that is people use options in their self-managed super funds. You need to decide for yourself whether it's appropriate for you and speak to your accountant. If you are going to use options, you will need to have your SMSF will need to have it included in their mandate, the investment mandate, that options can be used, and plenty of people do it, but you do need to consider if it's appropriate for your investment mandate. So that is something that you would need to just finalise with your accountant. All right. Guys, I hope you've enjoyed the session today. As you bump out of the session, we request some feedback. We'd really appreciate that. Again, apologies for Ivan not being here, but I hope you've enjoyed it nonetheless. If you want to get on and have a trial and start attending the live sessions that we do, where we go into the market live and look for trades each week, again, type in yes, you'll get access to all of that. Tim, who's here sitting in the session with me today, is available to speak to anyone, answer any questions you've got, and go through and set you up so that you've got your trial, you understand how to use the tech, and you're up at the races. So any support that we need to give. Look, we're really passionate about what we've done. We've done a lot of work. If you look at the technology that we built, it is the most advanced of its kind in Australia. It's been built by scratch. It's been built by Ivan and his team. We've worked with them throughout that process. We've invested a lot. Really, our goal is to help anyone who wants to trade options be able to do it really simply, and be able to get an edge through the technology they've got, to be able to get exposure to really good quality tested trade ideas, test their own ideas, and really be able to move about wherever you are with your mobile phone and be able to get the analysis that you need. John's asked a question, is it built around the Aussie market? Absolutely. It was built around the Aussie market, built by Australian options traders for Australian options traders. It's the same technology that the ASX use for their ASX options trading game, right? That technology was built initially, the ASX, contributed to assisting by having that game in place to help us, give us the platform of which to go out and build a lot of this technology. We do not see this as a finished product. Whilst it is the most advanced of its kind, this is an ongoing project for us, and we do not see us build the business that we provide as a technology business. Right? Technology is a component of what we do. Support, assistance, the ability to execute on what you're trading requires people to help you, hold your hand, answer your questions, give you the feedback, either through a platform like a webcast, or picking up the phone, or coming and sitting down with us to talk through it. Different strokes for different folks. Different people need different things in the mix. So we're here to help support all of that. All right. But what's important here is, if you want to go out there and trade and do this properly and get what you want to get out of trading, we believe this technology and our platform and our support can help you do that and can help you get up to the next level. So if you want to see for yourself that you can do this, then get on board, take a trial. We'll get you set up and get you up and testing this in the market. We'll hold your hand and support you all the way through what you're doing, to help you give you the best shot that you've got. All right. Thank you everyone for coming along today. I appreciate the questions, and really appreciate everyone who's requested a trial. Look forward to getting you up. If you've taken a trial historically some time ago and you want to get back and give it another go because you got caught up with things and so forth, put in for a trial. Tim will contact you and get you set up. Any questions, feedback as you drop out, please put them in. Otherwise, thank you very much for coming along. Any final questions, please drop them in. Yeah, appreciate people taking the time. Thank you, and have a wonderful day. And if you haven't already, type in yes and we'll get you set up. Thanks, guys. See you later.